Gold is on fire right now, and for a very important reason Main Street should not ignore. This legend in the precious metal space has been sounding the alarm for years, but now it's becoming urgent. Some will win, some will lose. Is the great dollar reset upon us? Stay tuned as I go one-on-one with Mike Maloney. Welcome to the Main Street Capitalist Show. I'm your host, Russell Gray, still here live at the New Orleans Investment Conference, and we're having a fabulous time. This conference is all about precious metals, resources, mining. We call it mining in metals. And so we've got one of the OGs in the gold and silver space, a man probably most of you know, and if you don't know, you need to know him, and you're about to meet him, Mr. Mike Maloney from goldsilver.com.
Hey, Russ. How's it going?
Awesome. You know, I've been on your show like a bazillion times, and we got to know each other during my tenure as a co-host of the Real Estate Guys radio show. We met way back in the day.
Yeah, I think that was like 2005 or 6.
Yeah, you were, before you even got together with Robert Helms, you were out at the Learning Annex, I think, expos teaching.
With Robert Kiyosaki,
That's where Kiyosaki discovered you, and then we kind of all grew together into this group. But for anybody who doesn't happen to know who you are, just give us a nickel tour kind of your career, if you can give us like the 2-minute version of that.
Okay, well, I'll go way back. I started out working, I'm dyslexic. They couldn't teach me in a method that I could learn, and they were wasting my time, I was wasting theirs. I basically left school in the 3rd month of 10th grade, so I'm a 9th grade graduate. My father goes, "You're not sitting on the couch. Here's a van, here's some samples, here's some catalog sheets. Congratulations, you're a traveling salesman."
Wow.
And so I went out on the road and did sales for a while. And then I got interested in stereo equipment, and I started building very high-end audio equipment, which today, my amplifiers and preamps are in the Queen Victoria Prince Albert Museum in London as an example of modern design in the 20th century when they opened their 20th century wing. And then I morphed into trade show production. And my father had died back in the late 80s. And he left my mother an estate that should have taken care of her for the rest of her life. And we got her a financial planner. And then when the NASDAQ crashed, about 60 or 80% of the estate vanished. And I started, and my businesses were hurt. You know, I've always been an entrepreneur. I have trouble working for other people.
Right.
So I wondered what it was that was so powerful to damage my businesses so much and to sort of wipe out this fortune that my father had left to take care of my mother. And I started studying the economy. I started studying the stock markets. And that leads into studying you can't study the stock markets in isolation. The economy affects them, they affect the economy. And when you study the economy, you really can't study just the U.S. economy in isolation. You have to study the global economy. And when you start looking at trade imbalances, you know, imports, exports, and current account deficit, the people that were really concerned with budget deficits, current account deficits, trade imbalances, was the hard money group, and they are also people that are fascinated by monetary history and how history just keeps on repeating. And, you know, it doesn't repeat, it rhymes. And that rhyming is basically history repeating, but with a twist caused by whatever the underlying fundamentals are at the time. And so I became fascinated with it. It really, studying this just consumed my life. And I started investing in gold in 2002 when the spot price was $315. And the next year, by April, I had discovered how undervalued silver was in comparison to gold. And I started buying silver in the $4.39.
And as we're sitting here today, it's pushing $50.
Yeah, right.
And the ounce of silver has not changed.
Right. It's the dollar that changed. And then I decided I was going to wrap my life around this. And so I was an investor first. And then I decided I was going to write a book and that I would become a precious metals dealer. And I had met Robert Kiyosaki and started to make a little bit of a relationship there. I asked if I could be the Rich Dad advisor for precious metals, and Robert says, well, you got to write a book first. And I was already working on it anyway. And so I became the Rich Dad advisor for precious metals. My first book was Rich Dad's Guide to Investing in Gold and Silver. And I started touring the world and speaking to audiences all over the planet with Robert. And I started a YouTube channel. And based on a handshake, Dan Rubach, he's Australian, he and one of his best mates, Aidan Magnus, moved all the way. Aidan lived in New Zealand, and Dan was from Australia, but living in New Zealand at the time. But they moved halfway around the world to work with us, and Dan started the YouTube channel. We were currently trying to film something for PBS or the History Channel. And Dan goes, no, this should be on YouTube, free, and it turned out to be the best decision of our lives. And so now I've got a pretty big YouTube channel, and there was a video series called The Hidden Secrets of Money. And my first book sort of predicted that there was going to be a crisis, a crash, and it came out just like 2 months before the crash and became a bestseller. And so that's the best-selling book on investing in precious metals in history. But currently, the best-selling book on investing in precious metals is my second book, which came out in 2023, and it's called The Great Gold and Silver Rush of the 21st Century. And pretty much any question that you have about precious metals, monetary history, the state of the economy, it's all in there.
But you have another book coming.
Yes, I do. That one's sort of top secret.
Oh, okay.
But it's something I've been working on. I started it in 2011. It's purely economics. Economists today don't even know what it is they are measuring. And so this is the underlying foundation that makes up the economy. That's what it's. What I'm trying to do is make it so that the average person, so anybody from 9 to 90, can read this thing and understand what's going on around them.
So there's so much in there. I want to unpack some of it, because part of this show is not just about how do I invest, how do I understand the economy, how do I grow my portfolio or protect my portfolio. Part of it is about being an entrepreneur, being a business person, starting a business. And I have some principles that I think, and I observe, like Napoleon Hill studied all these famous people and wrote Think and Grow Rich.
Yeah.
And at the very beginning, you said something about what I would put into the category of curiosity. You're one of the most curious people that I've met. And my experience in life is most successful people are curious, they're humble, they're generous, and they're hardworking. And so I wanted to point that out to people, because education in business precedes transaction. And so you really became more known as an educator. So talk about how you started from being curious and learning for yourself to having a business. You kind of went from, hey, I was curious, I was learning, I became an investor, and then I started a dealership. But there was a whole bunch of stuff in between there, because your dealership became huge.
Yeah, we're one of the largest online precious metals dealerships, and it's goldsilver.com. But basically, I had laid out the chapters of the book that I was going to write starting back in 2002. And it wasn't until 2005 that I decided, I started investing in precious metals, but I just dove head over. I mean, I studied it every day after work. I was studying it until 10 p.m., and then all day on weekends. It just completely absorbed my life, and I found it so fascinating. And I decided, well, if you want to get rich, you should probably study money.
Yeah.
And so I did. And, one of the things that it's been sort of a one-man war. There's two terms that I coined in my book. There was this book written in the late 90s by a guy named Larry Bates called The Great Economic Disorder, in which he said,
I have that book.
You do?
I do.
Okay. He said, wealth is never destroyed, it is merely transferred. And I went, oh my God, this is the biggest wealth transfer in history. So if you ever hear the biggest wealth transfer in history, I'm the guy that made up that term. And then the other thing was that when I first had a meeting with Robert Kiyosaki, it was backstage at the Los Angeles Convention Center, and he had put me on stage in front of 300 people at a time at small events in Scottsdale, Arizona that he was putting on. And here we were.
I went to a few of those. That's where I first met you.
Yeah. And so we're at this event that was on at the Los Angeles Convention Center with like 5,000 people. And I had asked his assistant if I could get some meeting time with Robert. And they said, you've got 3 minutes backstage at the Los Angeles Convention Center. And so the 3 minutes turned into 20, in which I had asked him, can I be the Rich Dad advisor for precious metals? And he said, you got to write a book. But then he said, I want you to stay here backstage. I've got to go on stage in just a minute. And I'm going to talk about when Nixon took us off of gold in 1971. And I want you to come out and tell them about it. And when he introduced me, he said, in 1971, the US dollar ceased being money and became currency. And for me, a light came on, and I went, oh my God, and I started studying it. And like Aristotle was the first person to define the key attributes that something has to have to qualify as money. A medium of exchange so that we can transact with it, a unit of account so that you can put prices on things, but most of all, a store of value. And when I started diving into this and studying it, I found that the math behind fiat currencies, if it's a debt-based currency that is borrowed into existence but promised to be paid back with interest, which all national currencies are, it cannot store value. Mathematically, it is impossible for them to store value. If they store any value, it means you're going through a deflationary implosion. And so I've been on this one-man war to get people to use the proper terms. There is no nation on earth that uses money. The stuff in your wallet is not, unless you're carrying gold or silver coins. Those are the only things that have proven to be money century after century after century.
Yeah, and this is such an important point. It's interesting because I think I know where I got that book. Mm-hmm. And another book that I got at that time was written by a dentist named Edwin Pop. And the book is the one that taught me that our currency was borrowed into existence. And so I have to create examples. And so I just said, well, okay, there's you and me, and we're in the economy, and we're going to play Monopoly. And so we get our money, except we don't get the money. We borrow the money from the bank, and we have to pay the money back to the bank plus interest. So let's say we put $1,000 into the economy, and let's put $1 million into the economy. We want a big economy. So we're going to put $1 million in the economy, and we're going to have to pay 10% interest. So we're going to have, at the end of the year, $100,000 of interest, right? So now we trade back and forth, and you're a way better businessman than me. So I end up with $300,000, and you end up with $700,000. So we've got $1 million. But we need 1.1. Because we need to pay the banker $100,000. We said, well, we don't have $100,000. If we give them $100,000, then everything shrinks. I know. Let's borrow more.
Right.
And that's the system.
I like to use the example, if you borrow the first dollar into existence, and that's the only dollar that exists in the economy, but you promise to pay back $2, where do you get the second dollar? You have to borrow that one into existence, but now you owe $4. And so whenever we do pay, and the dollars are borrowed into existence, like the U.S. Treasury will issue a 30-year bond. The Federal Reserve buys it, so this $1 trillion. A bond is an IOU. Loan me $1 trillion today, I promise to pay back $2 trillion over 30 years. So the Federal Reserve buys it by typing $1 trillion of currency into existence, except the currency to pay the interest has not been typed into existence. And these are just numbers. And my question to the audience is, how many numbers are there? Because that's the limit to the currency supply. It's infinite. So they type these numbers into existence. They buy the bond. and that is the asset that backs the liability of the currency. But when the currency is paid back, the debt and the currency meet each other on the balance sheet and annihilate each other. Those dollars vanish. With gold and silver, they don't vanish. It's money. Currency comes into existence and leaves existence. It vanishes. And so we've always got to create more and destroy more. So we borrow more. We've got to borrow more every year to keep the game going. And so the world has to go deeper and deeper and deeper into debt every single year. And then you have to ask yourself, who had something to loan us in the first place? And the answer is nobody. None of these banks, none of the central banks. It's a balance sheet trick, the operative word being trick. It is a sleight of hand, magician's trick.
And there's
that
an old
keeps the
proverb
world in
that says
debt.
the borrower is servant to the lender. If you can create money out of thin air, loan it to somebody, and collect interest, you've basically
Yes.
enslaved the people. And when I got that concept, that's what woke me up.
Okay. You just hit the nail on the head, except when you said when you can borrow money out of thin air, and it isn't created out of thin air.
Create money out of thin air.
Create money out of thin air, but it isn't created out of thin air because it's created by the enslavement of you. That treasury bond that the U.S., that the Federal Reserve bought by currency digits that were typed into existence, the currency that pays that treasury bond is from your taxes for the next 30 years.
Yeah.
You are enslaved by the currency system.
So the goal is to wake people up. I think
Yeah.
you had that passion. Kiyosaki had that passion. Our friend G. Edward Griffin wrote Creature from Jekyll Island,
Yes.
had that passion. That book woke me up. That book woke up Chris Martenson and a whole bunch of other people. Between Rich Dad, Poor Dad and The Creature from Jekyll Island, I think a lot of people woke up. And then as technology came and we were all able to get our mouths on microphones, and that's why I started the Main Street Media Network, to get more mouths on microphones, putting the ideas, educating Main Street so that they understand. Because the young people, they grow up and they're like, I know the system's broken. I can see the symptoms of it being broken. I don't understand why it's broken. I don't understand how it got broken. I don't understand how to fix it. But the one thing I know for sure, it's broken. Then you
Right.
have people coming out and say, well, the problem is the debt. We need to pay off the debt. But in the system you
If you
just
do,
described,
it's a
is it
total
possible to
implosion.
pay off the debt?
No, you can't. There's always more debt in the system than there is currency that exists to pay it. And so it is absolutely mathematically impossible to pay it. And if you even try, it starts a deflationary collapse, which would collapse the entire global economy. But what I love is your mission with Main Street Media Network is you are trying to preserve capitalism. If capitalism collapses, you look at socialism throughout history. It's been tried hundreds of times all over the world, and every time results in pain, misery, and death.
Well, you know that because you study history.
Yes.
But that history gets left out in at least public education.
Right, it does. And we've got all these professors at colleges that are teaching all these socialist ideals, turning out an entire generation where if we don't do something about it, which is what you are doing with Main Street Media Network, is to try and get a bunch of voices from that generation where their minds have been polluted with these socialist ideals. Socialism is basically saying, well, if we all just steal a little bit more from each other, we're going to be fine. It's basically nobody owns anything. We're going to share everything and we'll be fine. But it goes against some fundamental, humans are engineered to take care of yourself and your family first, friends second, acquaintances third, and strangers last. And socialism attempts to invert these natural tendencies that we all have.
Are you familiar with the Plymouth Rock experiment, the William Bradford?
Jamestown?
Yeah. So when they first came in, right, they decided to create a commune because they were all going to take care of each other.
Right. And the people that want to ride for free drug everything down to where they almost all starved to death the first year. The next year, you're all on your own.
Yep.
And it worked.
And it worked because everybody woke up every day hungry, worked hard, created abundance for themselves. And when everybody in an economy creates abundance for themselves, there's abundance in the economy. and enough to take care of the very small number of people that, for whatever reason, are not legitimately able to take care of themselves. But when you take the clause in the Constitution, like general welfare, and expand it out to the nanny state, now all of a sudden you've got economic issues. I mean, I understand it from a compassion point of view, from a human point of view. But at the end of the day, you know, you can care a lot about your aging parents and your sick siblings and whoever fell on bad luck. But if you have one job and you're trying to support 8 families, the answer is going to be a lot of poverty.
Right.
You need more people helping. Okay, so now I assume, like a lot of people, because you've been around so long and the hidden secrets of money have been around for so long, everybody must know about it. But there's a whole new generation of people that they've never heard of it. So tell us a little bit about the hidden secrets of money, because that kind of was your first opus, if you will.
Yeah, well, it was a video series that we started in about 2009 or 10. We started filming it. And it's a small group of people. I've got 2 full-time animators and a producer, director, editor that is just absolutely amazing, Dan Rubach, and then myself. So it's a team of 4 people. And when you watch them, a lot of these episodes, if you saw the same type of thing on PBS or the History Channel, it would have a credit list of more than 50 people, maybe 50 or 100 people to reach that level of production. But basically, we went around the world and followed the history of money, and there have been other programs where they follow the history of money, but they don't relate it to how that affects you today. And when I was up on the Parthenon in Athens, I was talking about the very first, basically hyperinflation and deflation. You know, they get in a war with Sparta. They start, other economists would say they debased the coinage. Well, they're taking in taxes. You take in 1,000 silver coins and 1,000 gold coins, you melt them down and you add in 50% copper, and now you can mint 2,000 silver coins and 2,000 gold coins. What is that? That's deficit spending. So it's deficit spending to fund a war that brought down the great period of Athens, and after a while it became nothing but a satellite of Rome. Also, there was a deflation going on when they've got armies that they are paying that are outside the city, and all this coinage is leaving the city to pay the armies. So there's these simultaneous deflation, inflation, debasement of the currency supply, deficit spending. We're repeating the same thing.
Yeah, so let's go back to
today.
the 1960s.
Yeah.
So for some of the people listening, they were there in the 60s, like you and I. Other people listening, their parents were there in the 60s. But in the 60s, 1963, 64, we had coins made out of silver.
Oh, yes.
And then all of a sudden we got zinc-plated copper coins. So we basically turned our quarters, 25 cents of silver, into a penny with no silver in it, right, to make it look like a silver.
Yeah.
So same thing, debasement, right? Take in real money, melt it down, and give you back fake money and create more of it, right? So
Yes.
we did that. And we had deficit spending and we had wars.
Right.
It's exactly the same thing.
It wasn't until 71, though, that we completely decoupled from gold and gave the Federal Reserve the right to type as many numbers into existence as possible. And now we don't have money. We've got a number supply. That's what the currency system is. It's just a number supply.
Richard Duncan, I know you know Richard Duncan,
Yes.
calls it, we went from capitalism to creditism.
Yes.
Because everything's credit.
But he promotes creditism, and I don't. I think it's...
No, I'm right there with you.
It's based on
right.
fraud, theft, and enslavement.
Well, let's talk about this, because there's some competing theories out there, and there are people out there. I read her book. Stephanie Kelton wrote a book called The Deficit Myth. Mark Skousen just showed me another book by...
she's MMT.
Modern Monetary Theory.
And it won't work.
Right, exactly. And so I figured you would say that, but
Right.
explain from your perspective, what are the fundamental flaws? Why won't it work? Or
Well,
what's the thesis? Let's start with
It's that we can create as much currency as we want, and the government can spend as much as it wants, and if the economy overheats, you just pull some of the currency out of circulation through taxation. And, the greatest experiment in economics that has ever been conducted was the USSR. Very scientifically run economy. All of the people running the Soviet Republic were economists, engineers, scientists, and it totally failed.
Technocrats,
When
central
you
planners?
when you give the bureaucracy the right to do all of this spending, that's not the real economy. It's getting its purchasing power, the new currency that they create, by diluting the currency supply, causing inflation, and stealing purchasing power from every unit of currency in existence, the currency that's in your pocket. And then, that's the theft part. And it enslaves you because you have to work to replace that stolen purchasing power when you experience inflation and suddenly your savings is less. Yeah, people have to be asking for a raise all the time. And then you're going to trust these people that think they're smarter than everybody else, that they're cut from finer cloth than the rest of us, these people in the government that are going to redistribute the wealth, and then they're going to tax certain individuals and not others to try and pull some of that current. It won't work. It's already been proven not to work. You can take pieces of examples of this. She's got a theory that is basically sort of a new theme on a very, very old, this piece has been tried, that piece has been tried. And whenever you have something that is centrally planned, the USSR just absolutely proved that a centrally planned economy will not work. The best thing is the free market. And you and I, wanting to do business, we create goods and services for each other, and we swap. Instead of having a middleman, some person over here in the government saying, oh, no, half of what you produce is mine, and we're going to redistribute it this way and that way. Well, if they take $2 from me in taxes, some of it has to go to pay the people at the IRS that took it. And then there's attorneys that work for the IRS that create all these laws. And then it goes to the Treasury, and those people have to be paid. And then there's going to be some argument in Congress over some new spending bill, and all those people have to be paid. And then it goes to the White House for a signature, and there's people that are going to recommend whether the president sign it or not. And those people have to be paid. And then they're going to create some agency, and there's the head office in Washington, D.C., and then there's a head office inside every state, and then out of the $2 that they took from me, $1 comes spitting out the other end to pay some teacher, where you could have sent your kid to a private school for either a buck, or you spend the $2 that they would have taken and get education that's twice as good. There is no way that the government can provide anything that the free market can't provide. I mean, people go, well, what about the roads? Well, people don't actually know what the cost of the roads are. I mean, how often do you see 8 guys standing around watching one guy in a pit working? Government can't do anything as well as private industry.
Well,
There's
so
nothing.
let's talk about that, because there are...
Oh, wait a minute. They can threaten people with guns. They're good at killing people and stealing. That's what they're good at. Sorry.
No, I mean, I think it's an excellent point, but if you take that to its extreme and you have no government, and I make a distinction between freedom and liberty, and I'll explain that in a moment if we have time, but from your perspective, is there a legitimate role for government? Is there something government should do? Should there be a government? Should we have no government? What does that look like?
Well, Milton Friedman says government has 3 primary functions. It's supposed to protect us from foreign invasion with the military. Now, I just don't, sometimes I feel like ashamed to be human when I think about how through the centuries we let the reptilian base of our brain that has territoriality and sex drive and things sort of run the rest of our brain. And we draw these imaginary lines on maps on the earth that don't exist. And then we have these popularity contests. We do it every 4 years in the United States, and we elect some jerk to tell us how to live, and to stay in power, he's got to make us afraid of the people on the other side of that imaginary line. And then they won't let you travel. You've got passports and customs, and then we create these armies and we kill each other. It's a sad state of affairs, actually. But,
okay, so the government,
the three primary functions.
Okay.
Yeah, protect us from foreign invasion with the military, to protect us from bodily harm with the police, and to enforce contracts between individuals with the courts. Those are the three primary functions. And it creates, if you've got a fair set of laws, it creates a level playing field for everybody to compete. When you have cronyism, which is what we've got now, where you've got special interest groups that lobby Congress, and you get a special laws passed for this group or that group, it warps and distorts the economy.
Rules for thee, but not for me.
Right, exactly. And then our fiat currency system, the very function of it, the Federal Reserve is limited. They can only produce currency by buying assets that are guaranteed as to the principal and interest by the U.S. government and your future taxes. That's part of the Federal Reserve Act. Well, up until 2008, that meant U.S. Treasuries was the only thing that the Federal Reserve could buy. Just before, months before the global financial crisis, they added mortgage-backed securities as something that was guaranteed by the U.S. government. So they knew what was coming.
Yeah.
But
and for those of you that didn't know what was coming, the housing crash was about to happen, and those mortgages were going to go bad. And when those mortgages went bad, mortgage companies would stop lending, and the lack of a new buyer to continue to set the price would mean the prices would go down, all equity would disappear, people who had mortgages with negative equity would walk away, and the whole thing would implode. And they were trying to prevent a massive financial system implosion based on having issued too much poorly qualified debt.
Poorly qualified debt, plus all of the derivatives that were stacked up on top of that debt, the collateralized debt obligations.
I think I'm going to do a whole series on that, because I did a deep dive on that after 2008 myself, because I got wiped out in 2008 and I wanted to know why.
Yeah.
And that's how I really kind of got into this whole space and realized, hey, I better pay attention to gold, because gold's like the canary in the
coal mine,
the gold mine, in the coal mine, that tells you. It's the first indicator of stress in the financial system. It's the first indicator of failure of the currency. It indicates a lot of things. So even if you're not interested in gold, to own it, which I don't know why you wouldn't, because it's savings. But if you didn't want to own any gold.
It's not just savings. There are these periods in history. They're very, very rare. They come along. There was a couple of months in 1934. There was 8.5 years in the 70s. And we're in this since 2000, where it's the safe haven, the insurance for your savings, but it simultaneously becomes the asset class that has the greatest gains in purchasing power, the potential. And that happens when it's doing an accounting of the expansion of the fiat currency supply. I'm sorry.
No. And I think people need to understand how that happens. What happens is when too much currency gets into the system, it's like cancer.
Right.
And what happens is that it's got to find a place to go. And so when people realize there's too much currency, it's losing value, inflation, right? Prices are going up, and I don't get anything for that, right?
And then the public finally rushes back toward precious metals, and they not only do an accounting of the currency supply, but their purchasing power of other assets, real estate, stocks, they might be heading south while gold and silver are going up, and that is what I call the greatest wealth transfer in history. Right, and it's happening right now.
I think one thing to draw out is because a lot of people throw real estate in as an inflation hedge.
Yeah.
And it's not really, in my opinion. And the reason is because it's very dependent upon debt. So much of what makes real estate work is a healthy credit market. When the credit market breaks, real estate will go down. That's what happened in 2008, whereas in that same environment, gold went up for the same reason the credit markets were breaking, because when money is afraid of risk and it can't go into treasuries because that's where the risk is, because the rates are going up or the credit market is falling, then it goes to gold.
Yeah. Real estate fell by half from 2007 to 2010, and gold tripled. So if you had sold a home in 2007 instead of buying a home, you would you could, and you were invested in gold.
Gone back 3
you
homes.
would have six. Real estate fell by half, gold tripled.
Yeah.
Sell one home, and with the proceeds of that one home, you wait 3 years in gold, 4 years in gold, and then buy 6 of the same home.
But you have to understand the signs, because you got to do it before it breaks.
But one of the things I was talking about is because the Federal Reserve is restricted to buying U.S. Treasuries and mortgage-backed securities, they've got to buy them, it specifies, on the open market. Well, what they did was they created their own open market. It's not an open market that you and I can participate in. There's a group of primary dealers. It's between 18 and 32 dealers at any given moment, and these are the largest brokerage houses on earth. They have to be market makers, where they show up at the treasury auctions every week, and then they buy treasuries, and then they sell them to the Federal Reserve, and then they take the proceeds and buy more treasuries or stocks. But either way, every time the Federal Reserve creates a dollar, that dollar first goes into the financial markets. It goes into these brokerage houses. And that causes, there's this tremendous correlation of like 0.98%, 0.98, which is 98%, between the rise of the stock markets and the QEs that Ben Bernanke did. And so all of this new currency makes the richest people richer. It doesn't go to Main Street.
Right.
It goes to Wall Street. And that is what has caused this bifurcation of society. The Federal Reserve is at fault for creating this backlash that has now caused a socialist to become mayor of New York City. This is just, it's insane. And it is directly, you can lay the responsibility right on the shoulders of Ben Bernanke.
Can't disagree with you on that at all. So let's bring this back home for Main Street, because we've been at this for a while, and I know that you talked about in the very beginning, hey, this has got to be relevant to the average guy. Obviously, we can't change the system individually. Collectively, we can, so the more people get on board. But while we're waiting to coalesce and turn over this system and get into a better system, a sound money system, whatever that looks like, how do you, as just a Main Street person, how do you either benefit from what's happening or avoid from being crushed by it?
Well, if you really study it, and I have, my belief is that this bull market in precious metals is nowhere near being done. We've reached the $50 region. Well, that's where silver was back in 1980. So we've reached the same level, but when you adjust all of this stuff for the growth of the currencies, I absolutely believe you're going to see gold way over $10,000 an ounce. We just had this rush that was happening in the rest of the world. It was happening in India, Southeast Asia, and Australia, where people were lining up at coin shops, buying silver and buying gold. And then the central banks, the Eastern central banks, not the Western central banks, have been buying gold and setting a floor under it. Every time it drops, they're making big purchases. And so the U.S., the Western markets, the U.S. and Western Europe, have not really joined this gold rush. So that my last book was called The Great Gold and Silver Rush of the 21st Century. It's only started. And when you inflation adjust silver, for instance, the consumer price index says it should be $220 an ounce today to equal that $50 price of 1980.
Wow.
But that is based on something I coined as the CP lie. It's not the CPI, it's the CP lie. In 1982, the government had one set of numbers, one method of calculating inflation from World War II to 1982. And then they started fiddling with it. Almost every year, they changed the method that the consumer price index is calculated. And every time it errors to calculating it too low. And so the truth lies somewhere in the middle. It's not the old method, but it's not the new method either. And everybody knows that just by going to the grocery store or filling your car with gas. Silver, the different measures, if it had grown by the same percentage from 1980 to today, as the Wilshire 5000, it would be over $2,000 per ounce.
Wow.
If it had grown by the same percentage as a single-family median price home, it would be $470 an ounce. If it had grown by the same percentage as the M2 currency supply, it would be $900 an ounce. And when you average, I took like 7 different things, and when you averaged them, you came out with $900. Now, I'm not saying silver is going to $900 an ounce, but what I am saying is $100 an ounce is a stupid low price. That is not even a floor. It's going to zoom right past that. And all it takes is, do it yourself. Just go over all of the numbers and calculate it. Yes, it was in a bubble in 1980, but it's destined for the same type of bubble again because there's going to be a greater panic this time around. In 1980, the stock markets were undervalued. We had gone into a grinding sideways thing. 1966 to 82.
10 years. It was a long
16
time.
years. The Dow bumped its head on 1,000 points and couldn't break through until 1982. But the raging inflation that we had meant that all of the companies, their revenues doubled or tripled during that period of time, and profits went up. So PE ratios went from all of the stock market being in a severe bubble in 66 and working that bubble off to where it was severely undervalued by 1982. So when gold and silver peaked in 1980, there was no real estate bubble, there was no stock market bubble. By every calculation except for PE ratios, the Buffett indicator, which is the value of all of the publicly listed companies compared to the GDP of the United States, is at historic highs. It has never been this high in history. The bubbles that we were in are in right now make 1929 look minuscule. The NASDAQ bubble, it was bigger than 29, but it looks small compared to today. Real estate is also, residential and commercial real estate are also in severe bubbles, and bonds are in a bubble. So we've got a correction coming. These things are in giant bubbles. Gold and silver are in a bull market, and I really do think that we are going through a monetary reset. People do not realize that the world periodically has a complete shift and a brand new monetary system. We had the classical gold standard until the end of World War I, and in 1921, there was something called the Genoa Conference, and we went on the gold exchange standard between the wars. And then that fell apart during the Great Depression, and 1944 to 1971. So we had classical gold standard, gold exchange standard, then the Bretton Woods system, and that fell apart. Nixon...
that was the trust us system.
Right, it was. So you had gold fully backed with the Bank of England being the hub of the gold standard. And then you had gold, you had currency, 40% backed by gold with the Federal Reserve Act, and the New York Fed and the Bank of England sharing the responsibility of it being the hub. And in 1930, England dropped out of the gold standard. And then from 1944 to 71, all of the world's currencies were backed by U.S. dollars for the very first time. Paper, U.S. Treasury bonds and paper dollars. And the dollar was backed by gold at 30.
Backed by paper, backed by gold.
Exactly. And the dollar was backed by gold at $35 an ounce to foreigners only. It was still illegal for Americans to own. And there was basically an international run on the bank being the U.S. gold supply. And Nixon had to take us off of gold. But when he ended the Bretton Woods system, August 15th of 71, he took the entire world off of gold, not just the U.S. dollar. And so for the first time in history, all of the world's currencies became fiat currencies backed by nothing except future debt all at once. Now, throughout history, there have been thousands upon thousands of fiat currencies, and not one had survived. In 1971, we went on this grand experiment, and I mean, that's not very many years, compared to 2,500 years of gold and silver being money. That's not very long that we've been on this grand experiment. So we've had these baby steps off of full gold backing, 40% gold backing, an unspecified amount that dropped to 8%, and then We now are at nothing. There is no backing. And the global dollar standard...
And are we still at zero reserves, too, in the banking system?
Yes.
So
yeah.
we have money backed by nothing, and our bank accounts backed by nothing.
Exactly.
That's
right.
a lot
and
of nothing.
they don't even have to have any vault cash anymore. Yeah. But we're going to go from nothing, a huge step from nothing back to something. And this is something, the other steps, the common man did not know it was happening. It only affected international businesses, international banking. But this is going to be such a huge economic convulsion globally that every person is going to
So I always use the game Mousetrap. You know, I like games. I did the panel this morning, brought out the Rock'em Sock'em robots, right?
Yeah.
Games to me, especially the mechanical games, help me understand. So I'm a big fan of the game Mousetrap. When I was a kid, we had the game Mousetrap. You do the little metal ball and it goes down the chute and it does all this stuff.
Right.
And you can see the trap coming. And so when I started studying the financial system, I was very interested in kind of cause and effect. And you know, you can say that correlation isn't causation, but if it happens enough, you got to begin to ask the question. And the whole point is to see the thing happening sooner. So there was a lot of things you said, and there was a couple things I want to jump in on. Because the goal is to get this like, okay, what does this really mean to me, right? I didn't think it did. I didn't pay attention. I didn't pay attention to you. I didn't pay attention to gold. I didn't pay attention to Kiyosaki. I just thought, hey, I'm over here in real estate. All these guys on Main Street, it doesn't matter. And they talk about, subprime. I don't care, blah, blah. And I was in the mortgage business. I didn't think it affected me, right? But you said bond bubble. And that has real serious ramifications in this context. You have a financial system. It's like a HVAC system. It's like a plumbing system. And it consists of banks, and it consists of bond markets. And then inside of that, what circulates through it is the currency, what we call the dollar, right? So that is the system, if you were to think of it that way. And so when you think about the bond market being in a bubble, what does that really mean?
Well, it's worked off a little bit of the bubble since interest rates bottomed. But the value of bonds is the inverse of the yield. And
yield being interest rate for
the interest rate,
yeah.
right. And the interest rates peaked in 1980, 82, and they were coming down ever since, meaning the value of the bonds was going up. So you had, and you look at a chart of this, and you can take a ruler and draw a straight line underneath it. And we've broken that straight line in the past few years. But it looks like interest rates are going to come down again, meaning you can't have a bull market in something. 1982, so it's a 40-year long
right. We
bull
hit the zero
market
bound.
with
right. Interest rates went all the way down to zero and just bounced on the bottom forever.
Right.
Every time they tried to lift off the interest rates, they broke something.
Yeah.
So, the last time they started this interest rate cycle, they lost Silicon Valley Bank, Signature Bank, there was an international Deutsche Bank. Was it Deutsche Bank?
It was Credit Suisse. And UBS ended up, there was a shotgun marriage where the government basically made UBS purchase Credit Suisse.
Yeah, so when you see interest rates moving, especially moving aggressively, and you understand their relationship to the bond market, then you realize what your mortgage rate's going to be, or if the banking system is going to be sound, or if there is going to be a credit crisis and you're not going to be able to get loans. And all of those things will affect anything, especially if you're a real estate investor, if you're running a business, you have a credit line, or if you have adjustable rate debt on your balance sheet, like a lot of multifamily syndicators had, or multifamily owners had, and you have this piece in your capital stack, or inside your financials in your business, where you had an affordable payment, an affordable interest rate, and all of a sudden it's completely unaffordable. And these companies, let's talk Main Street. You have a company where a private equity firm comes in, buys a perfectly sound company generating perfectly good profits, levers it up on cheap debt, and then the cash flows are sufficient to service it based on the low interest rate. And when the interest rate comes up, these perfectly good companies that provided perfectly good services to Main Street and employed people on Main Street go broke. And it wasn't because they had a bad business.
Or they become zombie companies for a while.
Zombie meaning that they're using 100% of their earnings just to pay
to service the debt.
Service the debt.
And so if the number of zombie companies that exist today, means that in the next economic turndown, we're going to see something horrific when it comes to the number of bankruptcies filed, the numbers of stores boarded up, the numbers of businesses out of business and having to let all of their employees go.
So, Mike, we could talk all day, and I've been on your show several times, and we have these lively conversations. We're both in the Collective Inner Circle Mastermind. We're about to spend a couple more days together, which is going to be super fun, and we're going to talk about all this stuff. I wish every conversation we had could be recorded. I just think there's so much here going on, but we've spent the last several days at the New Orleans Investment Conference. You've been in this business a long, long time. You've heard a lot. You've seen a lot. Let's just close out with, did you have anything that you felt like was an aha moment or a real big takeaway, something that you think was the highlight of this conference from your perspective?
Well, the highlight of this conference, I've been working at this now since 2002 is basically when I started, and I got in the business officially in 2005. So it's 20 years. Gold and silver have been considered a lunatic fringe investment that's only for preppers, yet it has been the number one performing, other than cryptos. But when you start from nothing, if you go from 0 to 1, that's an infinite return, basically. Cryptos are the first new asset class in 900 years. But gold and silver have been the number one performing asset of this century. And for some reason, people still sort of consider it a lunatic fringe investment. But at this conference, we're seeing increased attendance, and we're seeing a very, very good and positive move. And so you don't want to be scared. You want to be prepared. And part of the preparation for the economic convulsions that are coming is acquiring that safe haven investment while it still has some potential gains, the growth in purchasing power. That example of real estate falling by half and gold tripling simultaneously, allowing you to sell one house, put that savings into gold, and then buy 6 houses with the same proceeds. That wealth transfer is happening right now, but it's going to be over with in the next couple of years, and then it's time to move on to something else. But I think the revelation here is just how everybody is feeling, but also that we are nowhere near the top because we did not see the rush in the United States. This conference would be like 5 or 10 times
like the
the
Bitcoin
size.
conference, 30,000 people, right?
Exactly. And so this should be huge if the bull market was nearing a peak or over with. Now, I really think we just started the third phase of this bull market. And the third and final phase of any bull market is usually the phase where the greatest percentage gains occur in the shortest period of time. Now we have mainstream investment houses such as Morgan Stanley saying the 60-40 portfolio is dead. That's 60% equities, 40% bonds.
What did they add, Mike?
Right. They're saying it should be 60-20-20 now, 20% bonds and 20% gold, which means they are saying for you to sell half of your bonds and convert that to gold.
And is there enough gold on the planet to do that?
No. Well,
not at this price.
Yes, at $20,000 or $50,000 an ounce. Yes, but not.
But if you
at
count it as
5,000.
ounces, I mean, is there even enough for every American to have 10 ounces?
No, there isn't.
See, that's amazing. If you
Right.
think about that, there is literally not enough gold available, real gold, that
Right.
you could hold in your hand for every American to have just 10 ounces. And that's just Americans. Gold is an international commodity or an international something that
I feel, though,
everybody
the
internationally
real
wanna have.
opportunity is silver, because right now it takes 85 ounces of silver to equal the value of 1 ounce of gold.
Still bullish
and
on silver.
For the first 2,500 years that gold and silver was money, the average was about 14 to 1, between 13 and 15 to 1. And depending on where on the planet. And during COVID, we reached 120 to 1. I bought a bunch of silver when that happened. I wanted to buy gold with every fiber of my being because it was pretty scary what was going on. Markets were crashing. But silver dropped down to $10. So I bought some in the 10s, 11s, and 12s. I averaged $11 an ounce and increased my position substantially during that. And here we are up at 50, basically. So I'm extremely happy. But silver, if you buy it at, say, 80 to 1, it's pretty much destined to visit 20 to 1 sometime or another. And when it does, you can sell your silver and buy 4 times more gold than you paid for, basically. That is another wealth transfer.
So if you have questions about all that, just send an email to feedback@russellgray.com and ask me anything you want, because I get a chance to hang out with Dana Samuelson. I get a chance to hang out with Mike Maloney. I've been studying gold for a dozen years, and some people say I've learned a little bit along the way. I can decipher some of these things. If you're at terms you don't understand, let us know. Mike, they should be following you. How do they do that?
Well, if you just do an internet search for my name, Mike Maloney, you'll find my YouTube channel. You'll find goldsilver.com. There's 2 free chapters of my most recent book online at ggsr21.com. So it's Great Gold and Silver Rush of the 21st Century.com. It's got the easiest and funnest chapter in the book and the hardest chapter in the book there, but you will understand currency creation and this wealth transfer. So yeah, go and read those 2 free chapters. We don't even ask for your email address. I just want people to have the information. And then watch Hidden Secrets of Money, especially episodes 4. And I'm very proud of I'm proud of all the episodes, but 4, 9, and 10 are the 9 and 10 are about the parallels between the Roman Empire and the U.S. today, and it's pretty scary.
All right. So again, I'm serious. If you watch these things and you're confused and you have questions, Mike and I are friends. We see each other all the time. I can have him back on the show. I'm on his show all the time. If you go to my website, russellgray.com, look under the Watch tab, you'll see some number of videos I've done on the goldsilver.com a YouTube channel with Mike. But just send an email to feedback@russellgray.com, and I will make sure that any question you ask me, I ask him, and then we'll send you an email back when we answer that question so you get your question answered. Okay, Mike, thanks so much for being on the show.
Thank you. It was great, and I wish you all the success in the world by helping to change the world and keep capitalism from dying.
That's right.
It's
Ideas
the source
become
of all
actions,
prosperity.
actions become results.